Hello, and welcome to another episode of the Seasonal Tokens Podcast, where Polar interviews people so you can do more investing and less gambling.
Hello everyone, it is Polar here, the CMO of Seasonal Tokens. Welcome on another episode of the Seasonal Tokens Podcast. And today we have another special guest. We have Charles from Phuture. Welcome, Charles.
Great to be here. Thanks so much for the invite. Looking forward to getting into all things crypto today.
Perfect. So thank you very much for accepting my invitation. I think that it will be a fun conversation. I have prepared a good amount of questions for you. I hope that you'll have time for all of them. So let's start with the first one, which is, can you introduce yourself and your background with a few words?
Yeah, sure. So I've been in the crypto space since 2016. I used to work at a venture capital fund in London that was focused on digital assets. I was a partner at that fund. That fund invested in kind of seed to Series A. I was part of many different deals there. We invested in the likes of QuantStamp, which is a smart contract auditor people might be familiar with. Credo, did some early NFT investments back in 2018. We co-invested alongside some really big names. And that was really how I got into the space, how I built network out in the space. My role there was to essentially go out into the marketplace and find great deals and great teams, which we did. And that was, a massive success. Around kind of 2020, halfway through that, when DeFi Summer was getting started, myself and my other colleague left. And we started looking at, building out products that we felt were going to help unlock, the next billion users coming into the space. And one of those products was an index. So when we're looking at traditional markets and traditional finance, indexes play a huge role within that system. And I think that the statistics I was reading recently was, the US or the global equity market was worth $96 trillion. Of that value, I think 18% is held by index funds. If you look at crypto today, if you look at DeFi in particular, I think it's like 0.056. It's really small amount, or 0.56. A very, very small amount of that value is held. So we believe that this is a massive area that needs a lot of work done to it, and that's really what we've been working on. We've been working on building out indexes. We feel they're going to play a huge role in crypto, especially where the value and the TVL is held. And we foresee the next generation of users coming in will want to do so via a passive index product.
Really nice. Yeah, I have prepared a lot of questions about the index fund because, like I mentioned in our conversation before the recording, I'm hearing for crypto index funds for the first time, and I suppose most of our listeners will be in the same position as me. So before we start talking about that, I'm very interested to find out what actually has attracted you to crypto.
I've known about crypto for a very long time. I had Bitcoin back in 2013, but I'm not going to pretend that I got into the space then, because I didn't. It was by mere fluke that I did that. And I wish that I was smarter then to realize the opportunity that was in front of me, but I didn't. I worked at an asset management firm in London. And at that time, we were looking at different opportunities. Bitcoin was a really big topic in kind of financial sense in London. Everybody was talking about it. So the firm I worked at I kind of put me and this other guy in to kind of investigate what's going on, what's happening, what's happening in the space. So we did lots of meetups. We're just trying to figure out what the space is. We started to realize that it wasn't just Bitcoin. There were other assets here. The ICO kind of boom was really getting going. And we started to kind of just read white papers day in and day out. What we did that was really smart in hindsight was we started holding events and we started really having our own community within London, which is kind of weird for an asset manager to do that. And through that, Block One, the creators of EOS at that time had raised a ton of cash and were building out an investment syndicate. So in this investment syndicate, they had Mike Novogratz from Galaxy Digital. They had another fund in Europe, which I forget the name of. And Brendan Broomer approached us to be a part of that syndicate, which we did. We set up a typical structure fund and started deploying money into blockchain-enabled projects. And what was always funny about that, the mandate was never really EOS. So, which worked out well for us because, we saw how not to launch a network. I mean, I was there on June 1st when the EOS mainnet launched, and it was just a mess, the whole thing. And it was really interesting having a front row seat there and just seeing it all kind of unfold. But that was really what you need to learn, what you need to be seeing as you're in the space. And that gives you amazing insights into kind of how not to do things, which sometimes is the best way to learn.
Great, great. So if you have to go back in time, is there one thing that you believe you have missed while you have been starting your crypto career or crypto journey?
I think that I spent a lot of time traveling to different events in different parts of the world, Token 2049 in Hong Kong, Consensus in New York, wherever it may be. And I wish that I didn't. I wish I just sat in a room with my computer on Telegram and just networking with people there, because even though I understand like the attraction of meeting people in real life, it's like whatever, like you don't need that. I can do way more damage on my Telegram and Zoom than anybody can at an event. I can talk to 50, 60 people a day. Good luck trying to do that at an event when there's tons of people, everyone's bustling around. And the thing of events is, a large portion of those people are just there because they want something. And I think that really like clouds the conversation, and it just becomes a pitching fest, and it's just it's not that productive. So I probably would have told myself, don't go to those events, just focus on what you have to get done. And the other thing which I did, which I really am thankful for, which is the other side to your question, is I spoke to a lot of people. So I remember speaking to Stanley at AV when they were eFlend. I had multiple conversations with them. We were going to invest in it, but we didn't. And I just speaking to loads of people and being a part of those early networks, that's paid massive dividends for me and my network and what I've been able to achieve just by reaching people, talking with people, and being a part of their journey, right? That's how Richard Barr is an investor in Futures, because I've known him since the ICO of Constant, right? So that's a really important part, which is kind of the other side of the thing I'm glad that I did.
So it doesn't sound that bad. Actually, you have spent that much of your time to build your network, even though, like you said, maybe, but we don't know for sure if you have been able to get more from networking on Telegram and Discord, because it's different, but who knows? People maybe have been different during this time. I don't know, but it's a great point of view. I'm hearing this point of view for the first time, so it's very interesting. So you mentioned that you have started as a part of London VC fund. So what has actually made you to make the switch from this London VC to your current Phuture project?
Yeah, good question. I think that, we're at a stage of that fund where we deployed all the capital. And you have two choices then. One is to raise another fund, or the second is to go out there. And, we spent a lot of time working with a lot of different projects. So I would bring the projects in and work with my other colleague on doing the analysis and stuff, and he would kind of take care of that. And, we touched a lot of different projects, which is fun, which is great. We learned a lot, and it's probably a good way to learn about the industry at a very intricate level, all different aspects as well, from tokenomics to legal to regulatory to everything else. But we decided that we wanted to focus on something and build something, right? And not just continue to kind of be on a treadmill of different projects doing different things. And so what's really frustrating about that is you're seeing companies, you're seeing the opportunities that they have in front of them, and then for a variety of different reasons, they don't execute, they don't take advantage of it. And I don't know how other people feel, but it like pissed me off sometimes, because I was like, man, like really, like why didn't you get it done? Like, why didn't you execute that? You raised all that money and you just sat there and I don't know what you were doing. You're kind of playing, big entrepreneur and not actually doing the work and hiring all these people. And it just like upset me to the point I was like, you know what, like we got to get out there and just start hammering it. And that's what we did. We went out there, we started talking about Phuture. We're inundated with investor, and naively we thought it would take us 6 months to launch. It's taken us like a year and a half or nearly 2 years to build everything, have everything audited, everything else that comes with that. But that's where it came from. It came from wanting to be a part of something that grows and scales. And I think everybody should take a stab at it for sure.
Yeah, I suppose it is more exciting to build something and benefit from it than helping others to build theirs. But this is also really beneficial, but at the same time, the feeling is very different from having something that you have built and having something that you have helped to be built, right? This is what you're saying.
Yeah, I think that's definitely part of it. But I think as well, like to broaden your own skill sets, to really test yourself and put yourself in positions that you can actually grow and develop from. You need to take risks, you need to take challenges. I could have easily just stayed in the role that I was in, but I was kind of like, I want to get out there, I want to get into it. And I have a network, I've been talking to all these people, right? And I honestly felt that, we could add a lot of value in the space that we were looking at. And I wanted to build something. I wanted to contribute to the space that I love.
Really nice. So I think that now is the perfect time to explain more about what Phuture actually stands for. before I start with my other questions related to that.
Yeah. So Phuture has a pH. We pronounce it like an F, and the pH essentially represents like balance, the acidity levels. I'm not sure what kind of crazy stuff we were coming up with when we thought of that, but that's behind the name. But what we do at Phuture and what we've built is something really special. And we really wanted to make sure that if we were going to enter into a marketplace with a product like an index, we had to make it better. We weren't just going to launch something that was essentially the same old thing with a different color on it, trying to convince people it's different and new. It just doesn't interest me. So kind of a quick history to indexes. As we spoke about at the beginning, they're a huge pivotal player in our financial systems as a product. If you have money in a savings account, checkings account, or here in the UK, a debit account, you have money in an index, whether you know about it or not, right? It's a key pillar of our financial system. And what's funny is if you go to a financial advisor and you say, hey, I want to invest in equities or stocks, what should I buy? They will always tell you the same thing, buy an index. If you listen to Warren Buffett give financial advice, he always says, buy an index. There's a reason behind that, right? There's a reason why the index wins. And if you look at I think it's a 20-year period between any active management fund, hedge fund, trader, whatever it may be, over a 20-year period, 96% of them can't outperform the S&P 500, right? Which is an index. So this gives you an idea that indexes work. There's a massive place for indexes. And we can get into the factors of why they work, but I'll give you kind of a quick kind of history into that and then crypto indexes. So what we started to see originally in crypto was indexes coming together, but these indexes were like offshore companies that had, essentially a trader like trading the different positions. But to participate in that, you need to be a high net worth investor. You need to have a certain amount of money. You need to be KYC. You need to do this. You need to do that. It wasn't really a very simple product to use. Also, we had to trust the company was doing the right thing. You couldn't, withdraw your capital at any time. And I think that in early crypto days, an index didn't make that much sense because it was active driven. But now you're starting to see with Ethereum in particular and other sectors or other ecosystems is sector formation taking place, right? So with Ethereum, you saw the emergence of DeFi, NFTs, and you can even break DeFi into like lending, the lending markets, the synthetic markets that are there. There are so many different facets there. The DEX market, it's huge. So what is the best way to get exposure to that? How do I as an investor say, I really believe in DeFi. I don't really want to spend all my day trying to figure out exactly what's going to work and what's not going to work. Well, why can't I just buy an index? Why can't I buy something that essentially tracks the best performing assets in that market and not just tracks, own those assets outright that I can redeem for any time? And that way I can get the best exposure to this asset class, take a view on it and do other things. And that's where this all came about. And that's what we do. And I can kind of break that down further into other products that we have that do similar things. But that's really kind of the idea behind it and the ethos.
Amazing. So from what I'm hearing, does it mean that crypto index funds are mainly for busy people or they're also a good option for beginners?
It's crypto index funds at this current point in time that's what we're seeing and that's what our competitors are seeing, are extremely able individuals who've been in DeFi, been in crypto for a very long time, who essentially understand that, by holding an index, you get benefits to many different things. One is you don't have to manage the portfolio yourself, right? It essentially rebalances and revolves around the methodology. So in our case, we have a very stringent methodology. Our DeFi index PDI the assets have to have at least $5 million in liquidity. They have to be ranked by market cap. So we're looking at the top performing ones. So traders understand and know that they love and know these assets, but every month they don't want to have to keep looking at the back of their portfolios to like check in, rebalance, do everything themselves. That's a really important part of this. And I think that what we're seeing right now is very capable people really using these products because they understand them. I hope in the future we see people who are looking to get into the space to use these type of products. And originally my thesis was they would be the first users, but I was wrong. The users were extremely capable individuals who want these products. They understand them. The thing that we did at Phuture, which was really big for us, with PDI, our DeFi index, we integrated with Yearn. And what we did of our integration with Yearn is we allowed for assets within that index to go and generate yield. Now, if you look at Vanguard, if you look at BlackRock or any of the traditional indexes, they do this, but you don't benefit from investing in those indexes. So they have very cheap fees. And then what they do is with the money, to make more money, they'll go and lend it to a hedge fund who wants to take a long or short position on the market. In crypto, we hadn't seen that yet. We hadn't seen the ability for yield generation within an index. And for me personally, if you're in DeFi and you're not generating yield and you're holding these assets, it's slightly pointless. Yeah, it's nice to hold them, but like, why aren't you using them for their full potential? So with PDI, our Phuture DeFi index, you can actually, by holding PDI, the assets or a portion of those assets, generate yield which you benefit from. And I think that's another key facet that traders really like. And, it's another benefit from having to manage that yourself, all the gas fees that come with it. I think it's just very simple and people really like it.
Yeah, it definitely sounds like something very simple. And I think that the idea of also generating yield is really nice. Are there any benefits that you think people should know about investing in crypto index funds compared to doing crypto investing by themselves?
I think that crypto investing by yourselves, depending on who you are, can be very, very tricky. And I say this because there's lots of nuances and things you have to know. So you need to understand the asset that you're buying. You need to understand what's happening with the asset. You need to understand the governance. You need to understand the tokenomics. Is it an inflationary token, right? Like what is really going on here? And then you need to understand if you're buying it somewhere, what is the liquidity? You have to make sure that the asset isn't going to, half in value next week because they're going to be minting more tokens. Or there are so many different facets that come with crypto investing that a knowledge base is required to do this correctly. And I think that even though our target audience and our audience at the minute, our investors are all very crypto native individuals, I think they understand the benefits of that very well. Trading isn't for everyone. A lot of people make mistakes when they trade. And I think that what we're doing is we're, removing that human element of potential mistake and putting that into an automated process, which allows people to remove themselves from the emotional entanglement of wanting to hold certain projects because you think they're going to come through. There are so many different trading mistakes that are made. One mistake is you hold on to an asset too long because you think it's going to rebound, or you hold on to an asset for too long because you think it's going to keep going to the moon, right? Like you're not managing your portfolio correctly. And I think that, these are things that we are all susceptible to. I know I've made all of these errors when trading, and I wouldn't really call myself a good trader in any way, shape, or form. But that doesn't stop the fact that I've done really well from being in the space. And I think that other people understand that as well. And I think that if you believe in something, you believe that something's going to work out. If you believe in a sector like DeFi in particular, you want to take a view on that as a whole. Nobody knows what the future is going to hold. I don't know what tomorrow's going to bring. I don't know what next week's going to bring. And I don't know what the top project's going to be in a year's time or 6 months' time. But I know if I hold PDI, I'm going to own it, right? And I think that when people start to understand and remove themselves from these situations, you have a product that's always going to own the best assets, they understand the benefits of that. Let's say if you go on holiday, right? If you go away, you're not always going to be by a computer being able to trade these things. But with PDI, you're going to own them, right? And this is great saying. It says, don't find the needle in the haystack, just buy the haystack.
Yeah, that's really nice. And I would really appreciate if you can share more about this automation. What is actually happening with this PDI index fund after you buy it? How exactly the process is automated of buying the cryptos and I suppose selling them and generating yield and things like that?
Yeah, for sure. So there's two ways to buy PDI. One is to swap it for, somebody who already has PDI or, wants to swap it, whatever. And there's minting it. So the great thing about PDI is you can mint, I think it's up to 500 ETH worth of PDI and experience very little slippage because PDI isn't a new asset. PDI is just the assets within the index. So I think right now we have 10 different assets in there, right? So that's Uni, Maker, AV, Lido, Synthetics. These are assets with very deep liquidity. So you're not having to deal with like a new asset itself. You're dealing with pre-existing assets that have very deep liquidity that you know and trust. So what happens is on the back end is when you mint an index or when you mint a PDI or buy a PDI, it's backed by all of those constituent assets. This is really important because a lot of people do indexes, but they're like wrapped versions or synthetic versions that track the value. This is redeemable at any time. You can redeem PDI for the underlying assets at any given time because they're backed one for one, right? And that's a really important aspect. So that then allows us to do stuff like, well, we allocate 20% of the assets to Yearn that are within PDI. And the reason we do that is because we need an amount that if we have a run on the bank that we can pay everybody back, that we don't have to like mess around with withdrawing and doing too much there with Yearn. And none of this process is manual. So everything it goes through smart contracts and it goes through. Like there's nobody sitting there that's like, all right, we need to like allocate this to Yearn, click, click, click. It just goes through automatically. And that's what we've programmed in the contracts we've set up and our integration there. So you basically, you put your money in, we mint the index itself. We do that via 0x. We have a fantastic partnership with those guys. So we go and source the best execution for each one of those constituent assets to make sure the gas efficiency is 100%. Then once those assets are there, it's held. You have PDI, which is redeemed 1-for-1. We then put 20% of those assets in Yearn that generates yield. And then if you so choose to, you can just hold the asset and it's going to essentially track the underlying assets. So it might be $80 today, it might be $100 tomorrow, it might be $300-400 as the market picks up. It's going to track in line with that, right? And yeah, if you want to sell it, you can redeem it or you can get the dollar value for it at any time. That's kind of like the basic principle of how it works. Obviously, you can get into it and talk about the rebalancing functionality, who does that, how that works. And if you want to discuss that, happy to go there as well.
Yeah, absolutely. It would be great if you can share more about that. It sounds really interesting to me, and I really want to get more information about that, because I suppose most of our listeners will be also in my position. They'll hear for the first time something like that. So maybe you can mention or explain more about it.
Okay. So the way the rebalancing works is you have an index, and I'll explain this from like the standpoint of the situation and explain how we solve it. So when you have an index, you have a basket of assets. That's what it is. The basket of assets follows a methodology. So with us, we're looking for tokens that have been active for at least 1 year. That's very important. We need to have tradable history. We can't have something that's just come out of nowhere with really high market cap that's going to be added. We need to protect our index and the assets within that. We had a minimum liquidity threshold of $5 million. That needs to have been there for quite some time, right? If the token's been live for a year, it can't have just 1 month of 5 million and then come in and then go out. There needs to be some consistency within that. But the issue is, how do you rebalance the index? How do you take out the old assets and replace with the new? How do I know as an investor that I'm always going to own those assets? And how do I know that I can't, rely on Charles who's going to wake up at 5 a.m. to do that, right? So we have to make sure we have a process that's very streamlined. So what we do is we utilize Keep a Network. And Keep a Network essentially will do the rebalancing for us. So we have a script that we will run following our methodology. We'll look at what assets need to be added and which assets need to be removed. We then upload that to Keep a Network and they do the rebalancing for us. So they'll be poking the smart contracts and everything gets rebalanced, rejigged. On Ethereum, it takes sometimes close to a day to rebalance the full system with all the different trades coming through. We've launched an index recently with Avalanche. It takes a lot less time, but that's how the rebalancing process works. And that's the simplest way I can possibly put it. So that basically means we're not doing it ourselves, right? We're putting it out there to a pool of people that we don't know, and they're not like trading it, right? All they're doing is poking the smart contract, which pays for the gas, then does the trades.
Yeah, that definitely explains it in a very easy way. So I noticed that you have 3 index fund options. Right now, actually only 2 are available. But my question for you is, why exactly these 3 types of assets? Why not something else?
Yeah, so when creating an index, there's a couple questions that we need to ask ourselves, right? One is, the index that we're creating, is it going to be here or is it going to be relevant in 10 years' time? And it's really easy to like try to create stuff that's around the hype that exists right now because you're going to get immediate users and people are going to really want this. But is it going to be here in 10 years, right? And with DeFi, even though the hype right now, quote unquote, is not like on DeFi centric, I believe it's going to be here in 10 years and I believe it's going to be really big in 10 years. And I believe it's going to be big in the next 6 to 12 months as well. So that for us is a product that if we do the hard work on and we spend our time, we graft, we create something new, not seen before with the yield generation. Like no one's done that before. We're the first to do it. And we create something really, really important and really valuable for users, then that's going to pay dividends for us. It's going to scale with our success and scale with the market as well. When DeFi takes off, so with the TVL and the assets within it. So that was the first part. And what we did there was a sector index. So DeFi is one sector within the Ethereum ecosystem. We then launched an index of our partners at Colony on Avalanche. Now, Avalanche is not at a stage where you can launch a sector index yet. And I mean, you could, but you'd have liquidity issues and market cap issues and you wouldn't be able to do large trades for it. So what we did on Avalanche is we said, why don't we create an ecosystem index? So if I believe in Avalanche, I believe that it's going to be big, I believe it's going to grow, and I believe it's going to do really well in the future. I want a product that I can just buy that's going to give me exposure to the whole ecosystem. Why not? And that's what we created with Kai. That product's done exceptionally. I think that in the first 24 hours, I had like a 700K in TVL and I think close to 5,000 holders or something crazy. So, it's done really well. Demand is there. And once again, we're doing stuff that has never been done before. What we're seeing with Kai is not only is it, generating yield for the holders, it's also now being added as a key collateral piece within the Avalanche ecosystem. There's a protocol called More Money out there that has integrated Kai. Nothing to do with us, just did it, right? That's the great thing about DeFi and the ability to build upon other people's technology and protocols. We were integrated into More Money, and now lenders can borrow, supply, and borrow against that Kai within that. And I think that's what's going to happen with PDI and Ethereum as well. You're going to start to see more and more people integrating this as collateral into their ecosystem. Why wouldn't you? You have the ability to capture the top assets within DeFi without having to actually go in and list each one of them in one basket, in one asset case. It just makes total sense as to why you would get involved in that. We're not trying to sell you something new. I'm not trying to convince you to buy this token that you've never heard of. This isn't a new thing. These are assets that you probably already hold. In fact, we're just going to manage it better than you.
Yeah, that's a very interesting concept. It sounds more like a social investing or something like that, but with smart contracts that are doing the work and there is no way of human mistake, which I think can lead to a lot of troubles, especially because of the emotions involved in that. But you mentioned a very interesting statistics in the beginning about the percentage of people that invest in crypto index funds. And I suppose that the reason behind this is that there are myths and beliefs that people have about them, except, of course, the not enough advertising about crypto index funds. But what do you think are the most common myths and beliefs that are stopping people from investing in crypto index funds?
Good question. I think it's something that, we're constantly thinking about. The space is really small, right? And there are a few competitors or people in the space and they're trying their best. And a lot of them are not really that original. And I don't mean that in a disrespectful way. I mean that we should all be trying to push forward. And we're not sitting around being well, how can we get, 1,000 users from these guys? I'm not interested in that. I'm trying to grow the space for all of us. I'm trying to grow the pie. I'm not trying to siphon off some of their pie into our pie, right? That's just not interesting. How do we get more people to care? It's a good question. I think that first of all, there needs to be more awareness for passive products and more awareness for the need of indexes. And it's really funny because if you look in, I think it was 1975 when Vanguard began their index journey and created the Vanguard Index, a lot of people didn't like it. They said it was anti-American, it was not good for the markets, it was, so on and so forth. And what we're seeing in crypto is, hey, we've got this thing called indexes. You know them. These are built for Web3. You don't need to trust us. We can essentially, the index will manage the money for you and it's going to give you better returns than you can yourself, right? And people are like, yeah, but I may as well just do it myself. Or, there's 1,001 different excuses. I think time will tell as, trading becomes increasingly more competitive and as assets get bigger and also as performance is shown for indexes. I know that, the month of July, we outperformed Bitcoin and Ethereum and all other DeFi indexes in the ecosystem. Now, that's just 1 month. It's not an indication for future performance. But I think that's one key moment. The way we see it, though, is for the crypto natives to understand that this is a monumental increase of what they can currently do. And then looking at the wider market for non-crypto natives, it's essentially trying to place ourselves in a position, and when I say us, I mean the space, in a position of providing a service to get exposure. Now, if you think about a friend, a family member, whoever, who wants to get exposure to DeFi, how do they do that today? How do they get exposed to it? They have to open a Coinbase account or an exchange account. They have to get a MetaMask wallet. They have to buy Ethereum, put it in the MetaMask wallet, then go to Uniswap and do a trade. And it's really cumbersome. And I just don't foresee people even in the future doing that. And I really believe that the way they'll do that is allocate money to an index. That's what they do today in traditional finance. Go to a financial advisor. Go. If you know someone investing in equities, they will probably have a large portion of their portfolio in an index. You just will. That's just the way to do it, unless you have a serious edge. And even then, you could get wiped out.
Yeah, it's definitely a common thing to people to invest in index funds. I have visited a few financial advisors and all of them have told me exactly what you just said, that if I want to be safe and to grow my investments, it's better to put a good amount of my money in index funds. But I suppose it's still new in crypto and that's why people don't believe much in it. And I was wondering, when people come to your project, are they asking questions like, what's the profitability? Am I going to make a lot more than investing by myself and things like that?
Well, I think, to be totally honest with you, I think people think they're a lot better at trading than they actually are, right? So I'm not here to tell you that you're good or bad at trading. I'm really not. And I'm not saying that you should sell your whole portfolio and buy an index. I'm not saying, I think what you should do is you should understand that there are certain limitations that we all have. And maybe, just maybe, holding an index in your portfolio, even if it's 5, 10%, whatever it may be, is a smart idea and you're hedging from yourself. Because guess what? You might make a mistake. I made loads of mistakes when I first got into the space. I went like really big on projects I shouldn't have gone big on, or I didn't sell things I shouldn't have, I should have sold. And, these are things that happen. You think a position is going to come your way. The index doesn't care. The index doesn't look at your emotional situation or your ties to a certain project or your affinity to the idea of the memes that they generate. It doesn't care. It rebalances every month following the methodology. And I think over time, people will see that and appreciate that a lot more. What we're dealing with right now is the first wave. We're coming into an industry that, since its existence, has never had a passive product. And it's kind of like, well, why do I need one? And I think that I can sit here and tell you all the different reasons, but I think time will prove me right. And I think that, people will understand that they need to have exposure to a crypto index. And it's a smart way to do so. And you're hedging from, you don't have to allocate a lot of time to it. And I think that it'll be really tricky in the future to actually outperform one of our index products, especially as alpha goes away in the space as much.
Nice. Yeah, it will be amazing to see how you guys are growing and helping the space to learn more about crypto index funds and also to attract more people to this space. So also in the beginning of our conversation, as part of your London VC work, you said that you have been checking a lot of projects and giving your suggestions to the VC to invest in one or another. So based on all your experience that you have been able to gain there, what do you think are the most important characteristics that someone has to look for when he or she is looking to invest in one project or another?
Yeah, I mean, from when we were deploying capital as a VC, we would look at the team. It sounds kind of weird, right? You think, we need to look at the business case and let's look at the numbers. It doesn't mean anything. Because if you have a team that's not competent or a team that's not functioning well, they can't execute anything. So you look at the team. And the other reason you look at a team, especially with an early stage startup, is because you want them to have the ability to pivot. Now, there's been many businesses that we invested in where the idea changed. The market they were in is no longer any good. So what did? They pivoted. Boom. They get into another business. They did really well from doing that. And that's really important. And that comes around from investing into a really high quality team. For an individual who's looking from the outside in, it's slightly different. You're probably not going to bet the team as highly, especially in kind of what we're seeing today with different DAO-run projects, which, by the way, I have a very strong opinion on, and maybe we can cover that in a bit. But when we start to see, a lot of different voices and a lot of different people having a say, you need to look at, I would put yourself in a position where you're not at massive risk. And I think massive risk is investing into something like an idea. And we've seen that, we've seen ideas come and go. Ideas mean nothing about execution. So I'd put myself in a position where the business is generating revenue. You can go into different tools in crypto today and look at the top generating crypto projects, something along those lines. You'll find a list of projects. I'd look at those. I'd go into ones that you have a slight understanding of, spend some time in the Telegram Discord and the forums, get a feel for it. That's what I would do today. There's no need in this current market to go out and take huge risks. Everything's at a discount. Go and buy projects that have proven themselves, that have products, that have users, that have traction. That would be my advice.
Really nice. Yeah, you mentioned that the current market is a little bit different than what we have seen so far. And yeah, people call it a bear market. Some people call it a red market. In the end, like you said, everything is on a discounted price. What's your point of view and thinking about the current market situation? In which direction do you think we're going right now?
I think the market is cyclical, and I think that we've just been through an enormous bull market. I hate bull markets. I really hate them because when I first got into the space, we had a bull market, but I spent a lot of time in the space in a bear market. And I love bear markets because I can get in touch with people. I can get shit done. I can make things happen. I don't have to worry about oh my God, like this thing's blowing up over here. And they haven't done the work. Like we had competitors in the bull market who were overnight getting, hundreds of millions of dollars in TVL, and they weren't doing anything, and they no longer have that money, by the way. That will win because of course it will. And it's because you're not putting in the foundations. You're not actually putting in the work. You're not putting in the core pillars and tenets of success. You're just catching in on a yield farming phrase and, getting tons of capital in. You haven't built a business. Like, who are you kidding? So I love the bear market. I hope that it lasts a lot longer. I was in a community call this morning on Perpetual Protocol. They have the same thing. They're busy. They're making things happen. We're busy making things happen. Yeah. So, the bear market is fantastic. It's great to get in touch with people. And it's great to see if you actually have product market fit. Now, this is a word that people hate to use in crypto. It's a really important word. Do you have product market fit? Do you have users that actually want to use your product and actually need to use your product? And what happens is in a high market is, guess what? You can do incentive programs. You can get people to use you. You can pay for people. You've raised loads of money. You can do this. You can do that. You can spend 50K on influencers. It's all fake. It means absolutely nothing. And this is the time to actually build a business. If you can build something in a bear market and actually get people to care, give you attention and use you and want to use you, you have something very special. And guess what? When the bull market comes, you're going to absolutely crush it. No one's going to get in your way. And that's a really important thing to note. And I see a lot of people who are wimps, who are kind of like, oh, the bear market, and going on holiday because they're just like, it's too much for them to handle. And I think that, they shouldn't be in this space in the first place. I think you have to feel very privileged to be in this space. It's very early. I feel very privileged to be in this space. So I feel a massive duty and obligation to do as much as I possibly can to help grow it.
Yeah. And do you think that these guys that are actually going to a vacation are the real builders in the space, or they're just these speculators?
I think it's important to have holidays, right? I'm not saying you shouldn't have holidays and stuff. I think it's important to have your downtime. But I think people that let the price action get to them in the sense of their action, and that's kind of what I'm referring to, is when the price comes down, they're kind of like, oh, I'm just going to go away to Thailand for a month. No, I don't think they're the builders. I think they're just here when the money's here. And you see it all the time. I saw it in the last bull market where all of a sudden on LinkedIn, everyone's an IDO advisor, strategist, crypto market specialist. I mean, the list goes on. I saw it back in 2016, ICO specialist, ICO advisor, ICO manager, ICO, Listen, they're all fake. They're all losers. And, I love the fact that they get washed out. It's really nice. And because when they come back in, it's nice that, everything gets uplifted, or, the high tide floats all boats. But I find it a real pain. Maybe I'm just moody. I don't know. But I find these market conditions are the time to build stuff. And if we look at, historically at the bear market, 2012, Coinbase was built. 2015, Ethereum was launched. 2018, 2019, DeFi. He's coming to, in 2022, the year of the indexes and fixed rate protocols and other great things that are going on. So I love it. I couldn't tell you otherwise.
Honestly, I really love your point of view. I totally agree with you about what you're saying about the best time for building, for washing out the bad guys and giving a break to those that don't deserve to be part of this space. And when I asked you about the holiday, it was exactly about the holiday when the bear market is here. So you should definitely have a vacation. It's a stupid thing to believe that you can function like 24/7 years and to survive like it's impossible. I'm telling this from experience. I have tried many times to survive, but it's not very possible. You definitely get a very bad burnout. Some people don't even get back from that, so be careful with that. But this is another topic. So you are building something very interesting, and it sounds to me like I have a conversation with a guy that have been centuries in the industry, which is really nice, and I'm really grateful for having you here. But we are talking about builders, people that have projects. But I want to help to those that are just investors, like people that want to put their hard-earned money in something that can make them more money in the future. So what would be your advices for those people during a bear market? What they should do?
You got to buy assets that are proven. This is not the time to take huge risks. This isn't the time to invest in, the next big thing. This is the time to invest in things that you know and work. Projects like, look at what we have in PDI. We have, Uniswap, Synthetics, Yearn, Maker, Sushi. These projects all executed. They all have, millions and millions of dollars in revenue that they generate. And I'm a big believer that the next bull market is going to be predicated on revenue. And if you look at like where we've been and bull markets that have been created around what, right? The narratives, they've always been different. So in 2016, you had it was the kind of the idea, right? The bigger the idea, the more the money and, the more change it's going to have. I remember people pitching decentralized Uber as Duber, right? It was crazy. So, and then the last cycle came and it was based off, your ability to give money away. Oh, we're gonna give 50% of our tokens to a yield farming campaign, and it's crazy. And I think the next one's gonna be focused on revenue, which is actually interesting because that's a real way to look at a business actually works or not. Let's look at the revenue. And by the way, if you're talking about tokenomics, I think revenue is the most important conversation out there. If a project's not generating revenue, right? What does the token do other than useless governance events? Yeah, they are useful, but if there's no value being controlled there, it's not really that interesting. That's why Uniswap's so interesting, right? If they turn on the fee machine and they predicate that to Uni tokens, that's really interesting. And I think you're going to see that more and more. And imagine this, if you had a protocol generating, for example, $100 million in revenue every year, and I as a token holder, get a share of that. I mean, that's incredible. And what a way to be actually aligned with a successful project. And then for maybe once in crypto's history, we actually will all be aligned. Because I think the alignments have been off for ages, people raise enormous amounts of money, people then buy tokens, but there's no alignment there. There's no need to, justify that or to actually deliver anything. And it's really a shame. And I want there to be more accountability.
Yeah, it totally makes sense. And you are bringing a very, very important point that I think a lot of people are missing. And I'm also guilty with that when you are investing in a project, you are actually investing in a business. So when you are making your choice, you have to be sure that these guys, they have a plan A, plan B, plan C, how to generate revenue in the end. It's not fun to invest in a project that is putting all their money in events on Discord, airdrops, governance, parties, and things like that. These things don't generate ever.
Listen, we raised our money. We raised, I think, close to $4 million for Phuture in total. And we haven't spent, more than $5,000 on influencers. And at the time, this is how disgusting and weird it is. We had all of our investors and all the people in the space you gotta get influencers. You gotta get to pump the token. And we were like, why? The market's gonna come down. The prices are going to come down. What a waste of money. And everybody did it. Everybody was paying this guy 10K, this guy 20K is going to talk about us in the video. Yeah, but that doesn't build your business. That's a short-term thing on the stage that some people might buy your token. What does that achieve? What have you actually built by doing that? And there's a few projects that it's worked for, but don't kid yourself. It's not that simple. There's a high failure rate in crypto and any startup game. And it's just a load of startups. You have to be able to execute. You have to build something of value. And if that's not what you're about, then, you shouldn't be here.
Absolutely. Absolutely. And I totally agree with you that projects and also investors expect miracles from influencers and campaigns that they do with them. But in the end, if you don't give value, if you don't have business plan, if you don't have a real solution, why you even exist?
Influencers are just the biggest joke in the industry because a lot of them don't actually have an edge or a clue of what's actually going on, and they get paid and they get told what to say. They are clowns. There may be one or two that actually are decent. All of them have sold out. I'm not going to mention names, but I've been offered every influencer out there. They're total sellouts and they'll say anything for money. How can anybody take that seriously? And they've been so overused that like, I don't know anybody that like would listen to what they say. I think it's just a joke. I'm not interested in those people that are that brainwashed that some guy on YouTube tells them to go and buy a token that they go and do it. You're clearly not somebody that actually understands the space, A, and B, you're not somebody it thinks them for themselves. And it's like, I want you to understand the opportunity that you have in front of you and what we can bring to the table. And I want you to make a decision on that. I'm not asking for everything that you have. I'm not asking for you to, just go all in. I'm just saying, think about what we can bring to the table here. I'm not looking for somebody who's just going to invest $100 because they saw it somewhere. And guess what? The price doesn't triple overnight and they get all upset because they're not in it for the right reasons. Those that have a long-term view and actually get the space will understand, okay, I understand what's going on here. I understand how we're building it. And I also understand that if I keep myself aligned with this, I can do extremely well. And I'm going to make a lot of value. People that are here to make like a couple $1,000, whatever, are going to be gone tomorrow. We want people that want to build and change the world, right? And with that comes large upside.
Yeah, I totally agree with you. And the thing is that a lot of crypto project founders believe, because I'm a marketer, I have consulted a lot of crypto projects and I have seen this many times. Like when I start talking about marketing, they start with like, can you connect me with this influencer or another influencer? And I'm like, guys, your website sucks. You don't have any product that you can offer. Like, what influencers are you talking about? You have to build the foundations and then think about hiring someone that in the end, based on my experience, can bring you investors that care the most about the price, people that care about buying Columbus, going to the moon and stupidity like that. And if you fail to deliver, all your tokens will be dumped in the second. Like, do you think that these investors can help you to grow, to succeed in your future? Like most of the crypto project founders haven't asked these questions like you have done to yourself. So what you're saying is totally on point, and thank you very much for bringing it up, because I still believe that there are plenty of investors that hope or believe that influencers have their best interest in them.
Yeah, listen, hope is not a strategy. And when you hear the word influencers, I just think you're an idiot because you're not doing the hard work. This isn't easy. This isn't like, oh, come up with an idea and call the influencers and they're gonna build your business. Like, you gotta build your business yourself. Like, you gotta figure out, like, what is my core product value? Why should people give a shit about who I am and what I do, right? Like how, and if you're not building a product from those principles, you need to really question what you're building. If you got to like trick people in, that's not cool. There's so many cool things that you can do. We've got some amazing things planned with our index PDI that we're going to be bringing out very shortly that there are stunts, there are attention stunts. And that's okay. That's a good way to get attention, put yourself on the line. But you were not like, oh yeah, we need the influencers to come and help us, because that's just, it doesn't work like that, and, I want to build the business. I want to see our users grow. I don't want to just put steroids in and then they all come out the next day. It's silly.
Yeah, I think that this is the right mindset. So thank you very much again for bringing this thing too. I'll use it in my next conversation with a crypto project owner and founder that have some strange beliefs. Anyway, so before we finish, I have a question for you that I'm asking all of my guests, and it is something like our tagline or something like that. So how do you think a person can do more investing rather than gambling in crypto?
How can a person do more investing, less gambling?
Yes.
Yeah, I think number one, buy an index. Have an index as part of your portfolio. I think it makes a lot of sense. Number two is you have to have a thesis when investing. It doesn't matter if you're a small investor or a big investor. You have to have a view. You have to have, okay, I believe X, Y, Z is going to happen. And then you start to buy things around that view. So I think have a look at the space, have a look at what's going on, have a look at what you think is going to work. And maybe it's not a thing in particular. It may be a sector, right? That's why you invest in an index. Have a think about that. And as I said before, look at blue chip assets. You don't have to be risky. This isn't like bull market. Everything's $1,000 each and it's really expensive. Like it's not these projects that have been, and I'm not going to name any in particular, these projects like 10x from below from where they were before, right? There are massive discounts. You don't need to go and venture into the unknown to get returns. The returns are right in front of you. You can get a dartboard right now and look at the top DeFi assets and just pick any one of them and make money over the long term, because you don't need to take the risks. When you have IDOs, ICOs, everything else, it's a lot trickier because they're ideas. You need to see them executed. So invest in things that are here, invest in things that are real, invest in things that are work. And just maybe not the big thing right now. The analogy I use, and maybe this will help listeners, and this is what I tell the team anyway, is we are in a stream, right? And at the minute, the flow of water is very small, right? But if we're in the middle of that stream, there's no way we're not going to get the flow when it turns back on. And that's very true, because if projects are in the middle of that stream, and if I look at DeFi in particular, there's a lot of projects that will rise as the DeFi waters increase. And you could, use this saying for any sector in the crypto ecosystem. But as the interest and the levels rise, you have to be in the middle because you're going to grow with it. If you're on the side and you don't really matter, it doesn't matter if the market's going to 10x from now or not. You have to be in the middle. And if you catch that correctly, you cannot lose.
Amazing. Yeah, your first answer almost surprised me, but not that much, about investing in index funds. But but yeah, I definitely think that you also have a point with that. So Charles, it has been an amazing journey to have you on my podcast. And I think that we are close to 1 hour talking. So it's really enjoyable. And I think that I have probably 6-7 questions more that I wasn't able to ask you. But I think that it will become a very, very long one. And we probably have other things to take care of today, and not only talking to each other. So do you have any final things that you want to let know our listeners, or something that you think we haven't mentioned, but it is important for our listeners to know?
I have a lot of things to share with the listeners, a lot of big things, a lot of things I haven't been able to get into that if they knew would fundamentally change the way and view crypto for the better. But we can save that for another episode. Listen, I can only speak about what we're doing, we're up to. And I everything I say comes from a love for the space and what I do in the space. For us at Phuture, we're about to launch a savings vault for USDC. So this essentially means that investors or holders of USDC can deposit into our savings vault. They get the benefit of fixed rate yields. So we work with Phuture Finance, the leader in the fixed rate space. And they essentially, from working with fixed rate yields, you have a premium on those yields. So at the minute for USDC, on AV or compound, you're looking at maybe 0.38% return, right? Because it's variable, it's changing in the market. With fixed rate, you're looking at a massive premium because people that are looking to borrow with a fixed rate are willing to pay that premium. So what we do is we take 3 and 6 month maturities, we blend them together. We then allow for liquidity to be available and accessible for people who want to buy and sell USV, which is the product we're bringing out. And that's going to be really, really exciting. We're really excited to get into that space and tap into the different offerings that are out there. So that's going to be coming up very soon. You can find more information on that at Phuture Finance, our website. The product's called USV. And yeah, we'll have to do another episode because we're just getting into it.
Yeah, absolutely. Like I said, I have 6 more questions, and I suppose if we start talking about them, I will come up with 60 more. So Charles, thank you very much again for being a guest on the show. It was an amazing pleasure to have you here.
Great. Thanks so much for having me. Looking forward to listening to future shows and, coming back in the future and getting into it and revealing all the big secrets.
Absolutely. You'll have the second episode. I can promise you that. So thank you very much again, Charles. And thank you very much to all of the listeners that have reached this point of the podcast. Thank you very much. I appreciate your support. And if you want to support the podcast, please like, subscribe, and share with your friends. And yeah, I'm Phuture, the CMO of Seasonal Tokens, and I'll talk to you on the next episode.